All right, hey, what's going on? This is Dan Keller, your mortgage advisor at Guild Mortgage. I want to welcome you to another episode of Making Sense in the Markets. Today is Sunday, September 10th. Happy birthday, Dad, if you are listening. Episode number 37. I have come to you for 37 weeks in a row, bringing you information on the market and something relevant to your journey toward homeownership or your journey on the road of homeownership. And today I'm going to be talking about something super important, super relevant, and that is homeowners insurance. We're seeing, there's no doubt you've been reading and following up on what's happened down in Houston with Hurricane Harvey and over in Florida right now with Irma. And I want to make sure if you're listening to this, you're a past client of mine or a friend or someone who follows me on social media, that this message today may encourage you to reach out to your insurance agent and just make sure you have the right coverages in place. Before I talk about that, I want to talk about the markets though. This last week, this is key. This last week, we reached a 2017 low. 30-year fixed rates for government rates, that's VA, FHA, and USDA, are down into the mid to upper 3% mark. On your Fannie Mae and Freddie Mac loans, that's your 5% down conventional and 20% down conventional. Again, depending on down payment, credit score, and type of property, upper threes for 30-year fixed. I want to say this real quick. If you have a mortgage or know somebody who has a mortgage and they're paying private mortgage insurance or they have an interest rate over 4%, I want you to reach out to me and I want to do what's called a mortgage review. It's free and it's a way where I can take a few variables and see if there's any opportunity to save money, both short-term and long-term on your mortgage. So keep that in mind at work or when you're talking to friends or family members. I'd love to be a resource. So let's talk about insurance this week. It's important to note that in the 1960s, flood insurance, what we refer to today as a flood insurance binder or rider, was removed from the standard homeowners insurance policies. So in the event that your property is damaged by a flood, it most likely is not going to be covered under your standard policy unless you have a separate flood insurance policy. So I also want to talk about I'm reading just information on just basic information on insurances right now, but most standard claims or most standard insurance policies will not back claims related to wind damage or storms. Again, anything from high winds or waters that damage your property. Same thing, maybe even with mold. So it's important to understand, one, the riders that you have available to add to your current homeowners insurance policy. Most of them are not as expensive as you think and well worth the protection. The other thing to understand, and I want to make this super clear, that we go through phases in our lives where we grow financially. And it's important that the coverage that I had 5 or 10 years ago, it doesn't suit the lifestyle and where I'm at right now in my life. So it's important to do an audit of where you are financially right now and the coverages that you have on your house, that you have on your automobiles, that you have on yourself personally, and any umbrella policies that you may be able to add to protect you at the highest level in the event of an emergency or something that's happening down in Texas and Florida right now. All right, so that's what I've got this week. Call your insurance agent. If they're not local, I want you to reach out to me. I have a couple of incredible resources that I'm happy to recommend to you, and do an audit of your insurance. You will thank me later in the event that something happens and you have the right coverage. So until next week, if you need anything, please reach out to me via email. You've got my number. I look forward to being a resource to you or a friend or a family member. And don't forget, go Hawks. We'll talk to you later.